The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Well, as we look at Wednesday's session, the turnaround Tuesday, so to speak, was short-lived as we gave back a lot of the gains that we got Tuesday during Wednesday's session across the grain and oilseed trade. In fact, hitting some new lows, it looked like in March corn. A little more of a mixed tone in the livestock sector, but overall, it just kind of got back to the same old story, it felt like, in the ag markets. We're going to try to dissect this and talk about it. Joining us for a conversation, Mike Zuzolo with Global Commodity Analytics. Mike, always good to talk with you, my friend. And, I was hoping I watched Tuesday's action move higher, thinking, hey, maybe this short covering rally will continue to Wednesday, and Mike and I will have something positive to talk about. And then, well, here we go. Lower trade action on Wednesday. So I guess it wasn't in the cards, Mike.
I think the bowl is made of china, and we've dropped the bowl about 10 times, and we can't get the pieces put back together again. I think this is where I think there's two things going on in this market for the most part, Jesse, broad brushing it, and that is we came back from the holiday weekend looking for a sentiment shift led by the Chinese Lunar New Year data. And the Lunar New Year data said essentially domestic travel up about 30+% versus last year, up about 20% versus pre-pandemic levels. So good numbers, strong demand numbers that gave the Chinese markets some support, equity markets, both in Shanghai and Hong Kong, finding support both Monday night, and then we came back around Tuesday and again on Tuesday night. So I think wheat is a China-led market right now. It's trying to put in a reversal to the upside on a weekly basis. We need to get above about 603, 604 in soft red wheat to do it. The second part of this story, though, is about the demand side of the equation when it comes to row crops and also the South American weather premium. Just completely, it's like a drill has gone in the bottom of a bucket, and we're just pulling weather premium out dramatically at this point. Too early, in my opinion, but that's how the funds work.
Well, you raised some interesting correlations to me before we went on the air here. Looking at wheat, of course, trying to maybe be our upside leader, as we've talked about numerous times, Mike, but how corn's not really cooperating. So let's dissect this a little bit. One of the charts you provided us here today to start, you got an overlay here between SRW and copper. So what exactly are we watching here? How do these two items correlate together right now, Mike?
Yeah, disclaimer on today's charts, like most of our charts, I send these off to you before the close. So this is during the session that I copy these out. But what I'm looking at is a China-led commodity market. So what markets do we look at for overall global commodity demand and currency sensitivity? And that would be copper, crude oil, soybeans, wheat, and pork, hogs. Those are the Chinese commodities that I think are on the top of the list as far as what to track. And what I liked about this chart, and we've looked at this periodically throughout the last couple of years, is how similarly the copper and the wheat want to trade when things, I think, are going well in China and well with overall commodity demand. And you notice they travel very well together until you get to the later part, third quarter of 2022. You see they both take a slide. They both try and come out of that slide. Copper comes out of the slide, but the wheat does not, and it keeps sliding lower. Well, that was actually a pretty good leading indicator that the copper was really not going to go anywhere in the long term. And so copper rejoined the party to the downside first quarter of 2023. And you can see how very close in lockstep these two markets have been, Jesse, pretty much for over a year now. And again, that's what I like, is the consistency of this trade. So all of a sudden we're seeing copper try and want to launch again, and it's taken out some major highs. That line, that blue line, if you look at it, it's actually making some fresh 2024 highs at this stage of the game. Wheat's trying to look up and say, can I follow you or not? And so I think this is where we're at right now with the Chinese demand sentiment being mostly focused in some of these key commodities. And wheat is so important because wheat is planted all over the world, and wheat is so currency sensitive as a result of that.
I did like how wheat closed Wednesday. For most of the session, it looked like we were giving back about half of the gains or so that we had on Tuesday. Yet, I look at SRW futures, for instance. I look at just really across the entire wheat complex. I mean, things kind of clawed their way off those lows on the day Wednesday. So I think that was maybe a positive thing to take away, Mike.
I can't agree. I couldn't agree more because you're looking at a market that's, as I said earlier, negative the row crop weather in South America, but you got a lot of potential hard red wheat and soft red wheat weather to look at here because we're really warming up. I mean, we're going to be in the mid 70s by the time we get to the weekend in central southern Kansas, and Oklahoma, Texas will be in the 80s. And I can tell you, I've double checked this, Jesse. I heard the Kansas City News guy say that we were heading into our driest February on record. And that's true for this part of Kansas. Northeastern Kansas is really looking at extremely historic dry weather for the month of February. So between the weather and then we go back to the wheat corn spread and that food grade versus feed grain type of mindset. And we just broke above 170 again today. We're at the highest level on a closing basis, weekly basis wise, since August, July of last year. And so we're at a level now, we go above 175 wheat over corn. You tend to see the corn really start to react positively with any additional gains in the wheat market. So these are the things that why I think you're right on the money there.
Well, let's talk about the relationship here with corn. I'll pull up another chart and really, I mentioned this at the top of the show, corn spot contract, more new contract lows here. I know a lot of folks are just shaking their head at this corn market. So what are you seeing here? And I know too, Mike, I think with this chart, looking at CFTC data and more, still a record short position here in this corn market by a lot of the managed money, right?
Yeah, I think we are there now. I mean, the green arrow back in 2019 was a little under 323,000 contracts, futures, and options. I think we've probably taken that out at this stage with these new 3-year lows. We're essentially at December 2020 levels for both corn and beans. 409 is your next support for March corn. 1142.5 is your next support for March beans, because that's where you're at when it comes to the D's 2020 lows. What I don't like about the corn, and it really hurt today, I put in basis contract recommendations for 20 to 30% of my 2023 bushels that clients are holding in the bin about a month ago. And I told them, I said, we got about 3-4 weeks for this thing to work where the futures goes up, and it's done nothing but go down as the funds have added new net shorts. So I had to do a text blast today and keep the discipline and recommend taking the hit of 45 cents or roughly 45 cents on the futures side of the equation. And the main reason I took that recommendation and ran with it 4 weeks ago, Jesse, is because we broke above 450 on a closing basis, and we were already net short about 250,000 contracts. And I just didn't think the funds would want to get that much more net short in this market. And that's the problem in this market, is the funds tend to overdo it. And that's where those basis contracts that I had to lock in the futures, I want brokerage clients to, generally speaking, come back in and buy those markets back, especially if we can get that low in the wheat and that reversal, that close back above the $6 area in soft red wheat. I don't want to throw good money after bad by buying into a breaking market, but I really don't think we should be here at this price level in the corn market.
Oh, and to your point there on some of those basis contracts, Mike, I mean, this is kind of that time period of the month as we're looking at a lot of these different March futures that folks got to make those decisions. I mean, you got to either decide to do something or look to roll it over or whatever the case is. But this is kind of that time window, isn't it, Mike? It
is. Cash flow is absolutely necessary. The commercials know that. The basis side of the equation was looking good, and if the futures market would have rallied, I think the basis would have been widened out. I think two other things came into this before March notice day, first notice day on the 29th here on the futures market, is the South American weather premium, as we talked about, it's really being pulled out and sucked out of this market. on improving weather, but it could have gone the other way. And if we would have remained dry in Argentina, I don't think we'd be sitting with this net short contract in the corn market by the funds. And the last thing I'll throw out, Jesse, is the EPA. We've got this EPA question mark where we've wanted the major legislatures have gone out and said, look, give us 2024 summer, starting summer all year E15. Now the White House is saying it's not going to be until next year. And I think that really did hurt psychologically. And from a basis standpoint, I've noticed some of the ethanol producers in the middle part of the country have started to widen their basis out again. So it was just several things that came together that would not give us this futures-led rally back up. So now we just kind of wipe the slate clean and start all over again.
We are joined today by Mike Zuzolo from Global Commodity Analytics here on Market Talk. And Mike, let's look at another chart. This is a soy hog overlay, kind of continuing this theme of China-related markets that you're watching here right now. So let's talk on soybeans. I know especially soybeans were kind of the downside loser on Wednesday's trade for U.S. futures. So talk about what you're seeing here right now.
Yeah, this is one of the most important charts for the next 30 to 45 days for me, both from a standpoint of the livestock sector and also the soy complex, because I still believe, Jesse, when you look at the totality of the supply-demand fundamentals and this China-led market, if China really isn't going to heal up and the demand sentiment's not going to improve, I think beans still have the most to lose from that, especially if the Brazilians and the Argentines can come away with the crop that the trade thinks they can come away with. And so looking at 1150 November beans against 450 December corn, I talked to a client very close to me today, and I said, are you busy putting gas on because it's so warm? He goes, yeah, we're doing that. We're doing tiling. But he said, I've also got some river bottom ground that I'm going to move over to beans because I just can't stand this D's corn price. I really think this is a situation where the beans have a lot to lose. And for me to feel like we could go to $4 D's corn futures by the end of the year makes me think we can go to $10 Nov bean futures or $10.40 Nov bean futures. So the premium is still in the beans unless China says otherwise. And if China says otherwise, wheat and corn got to come in. So that takes you to the livestock sector. The hogs have decidedly moved higher, broken back up into new 2024 highs here. Are they predicting and foretelling, foreshadowing what's going to happen with the overall commodity market as it relates to China? Or is this just a blip on the screen? And I think Friday's export sales, it's going to be released a day late due to the holiday, could be a big one because USDA said they came in with the wrong pork weekly export sales number last week. I'm guessing they're going to drain that and bring it down. So be very, very cautious here in the hog sector. And I'm going to be watching this spread very closely.
One other quick note I just wanted to ask you about, since we're kind of on the topic of soybeans here before we go to another chart here. I heard some rumors that maybe China's getting ready to release some soybeans from its reserves on Tuesday into Wednesday. It looked like that maybe impacted Dalian futures overnight. I'm just wondering if maybe you heard some of that same rumor as well, Mike.
Yeah, I wasn't going to talk about that today too much because I'm glad you brought it up, but I don't know much about it. I don't know if it's just rumor mill, but that's exactly the issue. And what I was kind of dancing around is if you don't get burned by the last 5 to 7 years of Chinese soybean demand holding in there, because the market is starting to suggest to me that they're realizing that if it's going to get hurt, it's going to get hurt with Brazil taking most of the bean demand away from us. And so this is what I think we need to wake up to in the United States if trade conditions get worse. And I did not like the fact that China came out today and said, relating to the United Nations vote that the United States put out yesterday in support of Israel, that they were getting ready to create a, quote, slaughter in the Gaza Strip. It seems to me between the new Russian sanctions, the fear that there are going to be fresh Chinese sanctions, and this rhetoric that's ramping up, while I see this data coming out of the Lunar New Year get better, the trade tensions are still very high. So be very careful about those beans at this stage.
Okay. All right. Well, not to lead you down that path, but maybe it's something we'll pick up as a topic on a future program here for sure. Let's another kind of grain livestock related chart, feeder corn ratio. Let's talk about this as we segue a little more into the livestock side. What are some things you're watching here right now, Mike?
Yeah, this is a great ratio, and it has been for the better part of 2 years. I mean, ever since the end of 2022, you see how the funds have really taken into the feeder cattle and sold the corn. And I think this is part of the jet fuel for the feeder cattle highs and the corn lows. The momentum underneath this ratio continues to really perform well. And we see that 0.61 actually means that feeder cattle are 61 times premium lead month corn. We're up to 2015 levels. We're dancing close to that 2015 high. And then we've got the 2014 high up there at about 75, 76 times corn price. So this is one of the leading indicators I'm using for when to hedge feeders other than for profit, whether I do puts, whether I do short futures and recommendations, whether I sell some calls, and where I come back in and get some long corn positions built back into the market, kind of very similar along the same lines of wheat as far as what this chart shows me. And notice this feeder corn ratio in the last roughly 5-6 weeks. Actually last 4 months, essentially. It's a pretty long-term chart. You've seen kind of a parabolic straight move up. That tends to kind of exhaust itself very, very quickly. So this is another really crucial chart in the next 30 to 45 days for both the feeders and the corn. So kind of neat to be watching both hogs and beans and feeders and corn and how they interact, again, because of the funds and the speculation.
Oh, good stuff here. Let's talk as well, sticking on the cattle train. Let's look at a April cattle chart here. And I know too, in terms of this cattle market overall, Mike, cattle on feed reports coming up Friday after the close. Everyone's seemingly leaning pretty bullish with that report. So I know that's a talking point in these cattle markets here this week as well.
Yeah, and I'm really glad you set it up that way because we haven't talked about the cattle since last week. And I think this trade is really getting bulled up. And that kind of scares me. And it kind of makes me feel like the cattle on feed report better be bullish because the expectation is bullish. And so what I'm pointing out here on this chart, Jesse, is in the blue, there is a gap in that April chart at 190.30 essentially. And that goes back to mid-October when we made that break to the downside. I wouldn't be surprised if we got a bearish report, and we can talk about what a bearish report would be. But if we got a bearish report and filled that gap and then started heading lower, that would be a sell signal for me and a hedge signal for the fat cattle. And I'm guessing it would be for the feeders as well. If we get a bullish report, fill that gap and stay above that gap on a closing basis, that opens you up, I think, technically to try to get back to that 100% retracement level and get back close to that $200 level in the April fat cattle. That's ultimately the place where I'd really like to get some serious hedging business done.
Well, since you brought it up, I mean, what could a bearish report look like possibly on this cattle on feed on Friday? I was just looking for some of the estimates here, but I know in terms of like placements, that's the number I think a lot of folks are really watching, maybe down in that 86% range, I believe, Mike. So, I mean, I guess if we get something in the 90s, maybe that would be bearish. I mean, what would that mean to this cattle market, do you think?
No, I think you're right. 91 is the top end from what I've seen, Jesse. You get above 90, I think that really hurts the feeder prospects. And then if you also take the marketings well below 100, because the average trade guess is right around 100 or just below 100, you really want to see strong demand through those marketings as well. So those are the two numbers that I think are so important. And the range on placements is so wide. Again, we just don't know what's out there to be put into the feedlots versus holding back. And I think producers, cattlemen, just coming back from Colorado and being in Nebraska about a month ago, and producer cattlemen around here, I think the idea is they're still going to retain. They're more excited than they have been about building their herd back up. But how much is out there to be built back up? But it would make sense at this stage with the way the moisture levels have improved. Hay prices aren't terrifically expensive at this point, and the corn price obviously being very, very optimistic for the cattlemen that we would see a lower placements number.
Well, good thoughts. Great analysis as always, Mike. Before we let you go, anything final you want to share or reiterate with folks here as they're watching the markets this week?
I would just say psychologically, I've taken a lot of phone calls and text messages, and it is tough out there in agriculture, but keep your head up and don't get down. And I'd say this marketplace feels a lot like 2000, 2001 when everybody was getting super, super negative and deflationary in their mindset. but there's a lot of data out there, inflation data especially, that suggests we're not deflationary right now. So we're really ultra focused on China. Maybe that's okay, maybe that's right, but I don't think that's something that is something to worry about long term. So I'm not ready to throw in the towel, and you shouldn't be either.
All right. Well, if folks want to reach out to you with questions, get advice, look at your research and more, how can they get a hold of you, Mike?
Globalcomresearch.com, Jesse, and that's globalcom with 2 M's, research.com. And you can sign up for a trial or give me a call there on the toll-free number.
Fantastic. Mike Zuzolo, always good to chat with you, sir. Thanks for joining us on Market Talk again this week. We will talk to you next week.
I appreciate you having me on, Jesse. Thanks so much.
Mike Zuzolo with Global Commodity Analytics. That's going to do it for the show. Find us online at markettalkag.com. I'm Jesse Allen. Have a great afternoon.